Good evening, everyone, and thank you for joining us this evening for our closing roundtable for Village 43. My name is Scott Lurie, the founder of F Street, and it is great to be with you this evening. We are working on short notice for this roundtable, so we are recording this and we'll be sharing this with our investors that are not here. So if you're joining post production, just want to obviously welcome you and thank you for watching our content. Today we're going to be discussing our closing roundtable for Village 43, our exciting new development in Brown Deer, Wisconsin, under the legal name F Street BD2 LLC. As a quick introduction, F Street's in the alternative investment space. Many people get confused with what alternative investments are, and we simply describe alternative investments as anything other than the traditional stocks, bonds, mutual funds, and IRAs, etc. So we focus at F Street only on alternative investments in the real estate space. Our focus is on building long-term wealth for our investors through passive alternative investments in real estate. We like to describe these as we're planting money trees. This was resonated with me as a kid. I always wondered where my parents got their money, how we paid for things, and they always said the money tree's out back. So we continue to plant money trees. We're very proud of what we've built here at F Street, and we're really excited about Village 43, and we're going to get into why we're so excited about it here today. As we discussed about alternative investments at F Street, we focus on three different verticals. We focus on multifamily, we focus on the industrial segment, and we also focus on the private debt. All three segments are very important to our business. Tonight we are discussing our multifamily asset at Village 43, but we also do have investments in the industrial space as well as the private debt fund, where we're close to having our third consecutive month of raising over $2 million of debt. So really proud of our team and our investors for participating. It's a 10% fund, and we're doing really well in the private debt space. So thanks for participating. If you have, if you are not participating and want to learn more, we're always available to talk to you. Our team, while they're not here, other than Lane and Peter who are in the room, we do have a small but mighty team at F Street. If you ever are interested in visiting our offices, we're located in Milwaukee, Wisconsin. We'd love to have you. You're welcome anytime. Summer's better than winter, but it's always a great time to visit us in Milwaukee. So let's give a little update on Village 43. Yesterday, we successfully closed on the loan portion of Village 43. We closed with First American. The loan has closed. Construction is starting next week. We're really excited about getting in the ground, and we are now in the process of finishing what is the remaining small piece of the equity raise. And we've got some really exciting news to share with you today about some developments towards that loan closing that should enhance and will enhance investor return as well as equity multipliers. So what happened? We reached a major milestone yesterday. As I mentioned, we secured our financing with First American Bank and we closed on our loan. So that means the loan portion of our loan has closed. We do have $26 million of available funds from First American Bank. When we were underwriting this transaction, we went into what was going to be a rate lock scenario where we budgeted on a fixed rate construction loan. As we were navigating through the final week of closing on that loan, we contemplated what is a swap, which is a derivative contract that allows us to forward look into the opportunities of interest rate hedging. And with the market rate last week dropping a little bit in the short term, we were able to save a significant amount of interest, which we're going to discuss in a second. And we were able to do a 30-month rate lock swap with First American Bank. The execution went flawless, and it was really great yesterday while we were in the closing room to rate lock at 6.23%, which is significantly under our pro forma number. We'll talk about what that means to each of you. Construction starting. Greenfire, who's invested in this deal with real dollars. Greenfire, our general contractor, has put in a material investment, is getting ready to get started. We will be starting construction Tuesday of next week, September 3rd, rain or shine. We're starting. So what does this mean? We talked about what happened with the rate lock. So we went into the interest savings. We pro forma'd what everybody's seen is that we've had an interest expense that we are projecting during the term of our construction loan. With us being able to lock in a rate swap on the construction loan on a forward-looking 30 months, we have just saved $450,000. Not often, I can tell you from doing this, as long as I've been doing this, do we get to have big wins like a $450,000 win. We got a $450,000 win yesterday. That is a direct yield enhancer to each of you that are either invested or contemplating investment. Everybody participates, and we just improved the economics by $450,000, real US dollars, 450,000 of them. We combined with First American Bank, and we made it possible, was exploring all of their various options, rate drops, perfect timing, allowing us to lock in at 6.23% and only have to lock for 30 months. So in 30 months from now, we actually anticipate rates being below that. But who knows? And we also believe that we'll be able to exit that without any defeasance or swap breakage fee is what they call it. And it'll be perfect timing to execute what will be the initial refinance of Village 43. So phenomenal execution, really proud of our team for the entire execution, and really great. It was really great to have the great partnership in First American Bank. We're starting construction on Tuesday. We'll be hosting a groundbreaking ceremony. If you want to come in for that, if you're an investor in it, we would love to see you there. Opportunities to invest in live developments like this are rare. What does that mean? Usually there's not a lot of equity. There's a little bit of equity remaining today. We're confident we're going to raise that equity. And so we're going through the process. But your money, if you invest today, goes into the deal today. It starts earning money today. It starts participating today. You don't have to wait for any minutes. It's starting right now. So if you invest today, tomorrow, tonight, Tuesday, your money's going into the deal. It's live. It's running. So what's the impact, right? This is the impact. Let's talk about how amazing this is. We have a projected 24.64% IRR, which is an amazing IRR as is. Very proud of that. We've just improved that to 26.37% based on the exact same terms that we've outlined before to get to the 24.64% IRR. In addition to that, equity multiplier obviously is going up, and it's gone to 2.07. What does that mean? Per $100,000, 100K, you can expect after 4 years the exact same synopsis. We've not changed anything here. Instead of getting $196,000, which was before, now we're getting $207,000. Material movement, your dollars, hard at work, doing the exact same thing. You're just increasing your investment. For those of you that are already invested, by the way, you're already capturing this. So if you're here today to ask the question of if I'm already invested, do I participate in this equity savings? This savings, the answer is absolutely yes. For those of you who've not invested, I couldn't be more proud or excited about what's happening right now. We'd love to have you get in. We only have a limited amount of dollars left, and we're here at the closing table. We're ready to go. We're closed. We're already starting construction. So the deal overview. For those of you who've not seen the deal overview has not changed. Investor is offering a limited time investment opportunity in the 156 units. Our new projected IRR right here. For those of you who are unaware, Green Link, which is a property located directly across the street we developed a few years ago, we have 95% plus occupancy with 1/3 of the investor's capital already returned. Our focus remains get you your money back. Not everybody has that thesis. Some people would argue it's not a great thesis. It's the best thesis. If you make an investment, you want to know you're going to get your money back. There's never a time to say that your investment's going to be investing forever and you don't know if you're ever going to get money. That never makes sense to me. So you're going to get your money back. That's our thesis. That's our goals, and you're going to get it back as fast as possible. We, F Street, do not participate as the sponsor until you get your money back. We are 100% aligned with the success of the development and your money. Smart money following the smart money. Market strength, strong housing demand in Milwaukee. Infrastructure is already there. You're only about 15 minutes away from downtown from the site. It might take you 20 minutes. And then once again, we have a really strong partnership with the community through our tax and incremental financing, or our TIF, which we'll further highlight in a minute. So F Street BD2, we're building a Class A development. It's 156 units of market rate apartments in Brown Deer, Wisconsin. Our construction is 8 to 14 months. We're starting on September. In May, we're delivering building 1. That will happen for sure. We have a TIF. The village is approved. It's already approved. It's already executed. It's already signed. It's already part of the deal. $7.45 million of incentive to us as the developer, which is going back to the investors as a yield enhancer to make this deal make sense. It's a big number, $7.45 million. And then the cash flow, F Street will distribute monthly cash flow and refinance to maximize returns until the asset is sold. That is always the statement. So we just discussed this. We just closed on a $26 million loan. As I mentioned, we entered into a 30-month swap at a 6.23% fixed interest rate. Okay, what does a swap do? It fixes this interest rate. So we are fixed. We are fixed for 30 months. 30 months. The rate will never go above and it will never go below 6.23%. We have fixed in an interest rate that allows us to have a projected interest savings of $450,000 versus the financial and the underwriting you received a week ago. Nothing's changed except we've reduced our interest expense by $450,000. So we got some beautiful renderings. We are building some garden style apartments with amenities. The garden style apartments allows everybody to have their own door. So someone lives there, someone lives there, someone lives on the lower unit, someone lives on the upper unit, garden style. What we have found, what the information is shared, is that garden style apartments allow for a little longer livability. We have a garden style apartment complex down in Union Grove. People are staying longer. Means the friction is less, which means the returns are higher. So we do have an open forum tonight because we did call this a roundtable. So submit your questions in the chat or raise your hand to speak. If you have any questions, please put them in the chat. I have volunteered to submit the first few questions because these are questions that investors have asked us, and they're really good questions. So I want to be able to offer as the first few questions to the group. A couple questions as the chat starts populating. That's great. We will answer those questions. And if there aren't any questions, we totally understand. We want to give you an opportunity to invest. If you're already an investor, you have an opportunity to add to your investment. This is that deal that has the compelling reason to add a little more. If you are not an investor and you're in our private debt fund or you're in any other investment or you've never invested with F Street, there is a great and compelling reason. Now is the time to make that investment. Let's ask a couple questions. If the loan is closed, why are you still allowing investors in, right? Natural question. So we have completed our raise to 90%. We are raising the remaining equity, but we needed to close where we could take advantage of the swap rates where we were able to recognize the savings of $450,000. So we did not know where the volatility was going to go in the market. We don't know where it's going to go on a going forward basis with the September Fed meeting coming up. So we have a little bit of money to raise, but we are 100% confident that funds will be raised. If they are not raised, which is another great question, F Street will contribute the remaining funds. So we're closing, we're not at risk. We have capital, but we are raising and allowing our investors to participate. What does F Street do to prevent investors from fraud? This is a question we're receiving a little bit more, as unfortunately there are some bad actors in the industry that are either committing fraud or are shutting down operations or are being seized by government agencies as a result of fraudulent activities. This bothers me every day. I know myself and our team at F Street show up every single day and give us 110%. Fraud is a derivative of a character flaw or somebody that has a different agenda than what F Street has. There's many ways to determine what we do to prevent. So from an internal standpoint, we've got two-way dual cryptic ways to require all authorizations for money to move throughout our organization. So we have a policy of fraud internally. From an external fraud, it's really a question of what entrepreneur, what jockey, what party do you want to invest in? Our thesis here is always transparency, consistency, and communication. We are aligned with our investors, meaning we don't earn anything until you get your money back. So there would make no sense to go through the process at F Street of building buildings if we do not have a means to get you your funds back. And the other way is really background checks. Learning more about the entrepreneur you're working with. I'm really proud of our entire record. We have 0 issues in our background, not a single one. I think my speeding ticket is probably up there, but other than that, and I was probably not speeding at the time, other than that, we have a squeaky clean background. We come from of ethics and morals that remain high, and there's a way to check. There's never a way to have a bad actor stop being a bad actor. But that doesn't go on forever. We've been around for 20 years. We have no interest in, obviously, being a bad actor, and we are a great sponsor. Check our references. We provide all references to any investors. They're available to you. Check our Google reviews. You can see what our investors are saying about us. And I encourage everyone to call our investors and ask them what their experience has been with F Street. And then, what does my investment start accruing a preferred return? When equals now. Now it starts, right now. So if you invest, it starts immediately. Your preferred, 8% preferred, it's an 8% preferred return. It starts to accrue now. So if you make your investment is accruing now. Great question. How does F Street monitor construction? So monitoring construction is a really important part of our business. We do have EJ Herr, who is the Director of Project Success and Delivery. He's responsible to make sure that we are delivering the projects on time and within budget. Every single week, we have an OAC meeting, Owner Architect Construction, where we're meeting to discuss any requests for information, RFIs, or any information that's required that we have not delivered. And from there, we manage budget every single week, which you can have as an investor. We get a sheet that shows us what's on track, what's tracking, what's struggling, and occupancy date. Our occupancy date is already coming forth right now for May of 2025. And what happens if lease-up goes slower than expected? So people, this is a great question, right? I get this all the time. What is the risk? Where are the risks in the deal, right? So they're the natural risks, right? We completely botched the contract, green fire screwed up, the GMP contract doesn't work. None of that is a real risk for us. The real risk stands in if we projected that we're gonna be able to lease up in 5 months or 6 months or 8 months, and the lease up goes longer, right? It takes me 12, 14 months. What happens is returns start getting degraded, right? That's exactly what's going to happen if that ever happened. We have not had that happen right now. Right now, we've put ample cushion inside of our pro formas to allow us to beat budget, which is our goal, to call you, the investors, and say, investors, we're really proud, like we did at Oak Creek. We leased up in eight months and we're ahead of schedule. We have enough cushion in our pro forma to make sure that our lease up is efficient. But if it goes slower, returns will start to creep down. That is the risk exposure. We will not impact your equity. On this deal, we have an $8 million plus equity spread from construction costs to appraised value before we even got in the ground. We have $8 million. That is a major win. I don't think we've had an $8 million swing in a while. This is a really big one too, that not getting enough play here. We have $8 million of equity value to you, to everybody, all participants, before we even break ground, based on the appraised value. Okay, we thought this was an open forum. We've got a couple questions here. I do have Lane in the room with us. Lane's going to read the questions, or Peter's going to read me the questions, and I'll repeat them and then answer them for you. So thank you for the questions. I see they're populating, and thank you for being here this evening. Okay, so the question is, on a $100,000 income, on a $100,000 investment, what is the projected cash flow or return on that investment on an annual basis? And it's projected at 10%. So we're at about $10,000 per $100,000 invested today. and that's considering all of the projections that we've outlined on a going forward basis. Conservative, one might argue, but nonetheless, $10,000 per 100,000. Yeah, so just to clarify, because that question is a complicated question. That is post refinance, and that after post refinance, which should happen in month 30, that's the cash flow per $100,000 that the investor should expect to be returned. Yes. So the question is, can you use an IRA to invest in this project? The answer is yes. The way to invest in the project through an IRA is through what we call a self-custodian IRA. There are several ways to do this. We have an investor relations team that can help you walk you through this. It's, by the way, a wonderful idea, but let's walk through it. There is equity trust, end trust, there's checkbook IRA, there's various different self-directed IRAs. Your IRA would be the investor. All of the income will go back to the investor through the IRA. Okay, so that happens, right? So if you have an IRA, all of the investment will go back there. The downside to doing it in an IRA is that you don't get the benefit of the depreciation. I am not a tax accountant. Check with your tax advisor, but you would not get the benefit because your IRA would be getting the benefit of the depreciation, which becomes immaterial, which is a tax benefit to the investors that are investing with cash. So you can absolutely invest. You don't get the benefit of the depreciation, but you get the benefit of the deferment of income, and that is a major win as well. We have a lot of investors that invest through their self-directed IRAs or 401ks. You can do that too. We can help you get set up with Entrust or Equity Trust or any of the custodians that are out there, and it's a wonderful way to build generational wealth through your IRA. Absolutely. Yes, the question is, does F Street or any of our other partners have our own cash in this investment? The answer is absolutely yes. The number is over $1.5 million. So the answer is yes. Our partners are invested in this deal. Our general contractor is invested in this deal. Our architect is invested in this deal. F Street is invested in this deal. Yes. The question is, I found this investment directly through F Street, but I also noticed that the investment is also listed on Realty Mogul's site. What are the pros and cons of investing through F Street versus Realty Mogul? To be honest with you, this is a legal answer that I don't know if I'm qualified to answer right now, which is we partner with Realty Moguls, who is a dealer broker through FINRA. They have different sets of everybody gets the same returns. There are different sets of costs associated with each investment, and I'm not qualified to answer that question. You can invest directly with F Street. If you found us through F Street, you can invest directly through Realty Mogul. We have investors that do both. I don't have a good answer for the question other than do what you feel comfortable doing, and the communication will be through either F Street or through Realty Mogul, depending on where you invest. F Street has a portal where we share communication and direct updates directly through our investors. Realty Mogul has a portal which we share with Realty Mogul, and then they upload it to your portal. So inside of Realty Mogul. So you can invest in either platform. They're partners of ours. This is our second project with Realty Mogul raising equity, and we've had fairly good success with them. We find them to be good partners. The answer is, the question is, what's the current occupancy of Greenlink? Do I have cash-on-cash returns for Greenlink, and how long did it take to lease up Greenlink? Greenlink was 134 units of market rate apartments. It's a little different build, so it's slab on grade with 3 and 4 stories of apartments. The occupancy currently today is approximately 95% occupied. We refinanced that project just shy of 30 months and repaid almost 30% of the investors their capital at the time. We are making monthly distributions. That project has never not distributed funds. And what is the current cash on cash? I do not have that answer for you today. If you can, Peter, please get me that individual's email. I will share with them the cash on cash. We do have a white paper on F Street's portal about GreenLink that has some data, but I will make sure whoever that asked that question, thank you for it. I will get you that answer back here tomorrow. I apologize, I don't have that information on hand. So the question is, market rents, what are their concerns about with market rents? We are projected, Brown Deere is projected in the mid 180s on rents right now for the market. We've had great success in the market seeing demand, so demand remains high at GreenLink and in the overall market. There is a, so I feel very confident with demand. I feel very confident that our demand will equal our ability to lease units at the pricing we've already we've determined and pro forma in our underwriting. There's a lot of talk around everywhere about, and I think it really comes from the coasts and the Sun Belt states, really of what happens when market demand for rental rates, when that pendulum kind of shifts from where we are over here, which is pretty high demand in these markets, kind of shifting back towards maybe medium or right down the middle. I don't know, there is a demand for housing. There's 4 million units of shortage of housing. In addition to that, with the slowdown of the last 18 to 24 months of rising interest rates, a lot of projects have been put on hold. So the deliverables, the amount of new units coming online in 25 is significantly less than it's ever been, specifically in the Midwest region, I would say. We don't have a lot of new starts happening in 2024 in Wisconsin, and specifically southeastern Wisconsin. It's a fair concern. My feeling is we have not seen ridiculous, absurd rent growth like, let's just say, South Florida has seen. We have seen a rise in our downtown market of where we're pushing and rivaling some Sun Belt states. We were in Rent Manager, one of the publications, the second fastest growing rental market in the country. But I think that's all relative, right? We're not seeing thousands and thousands of new delivery units here in southeastern Wisconsin. So we're very confident in our ability to deliver and execute on our business plan. We think that we have room to grow in our rental rates, and we feel very good with our lease-up schedule. Did that answer everything, Peter? Okay. So the question, part two, is what are risks related to refinance, right? So we have a pro forma that we have to hit, which is a function of income less expenses getting to NOI. And then once we get to the NOI, once we find our NOI, right? So once we get to this NOI number in actual, so traditionally refinance requires 12 months of trailing numbers, and some people require 3 to 6 months of trailing numbers that they then take and extrapolate out to equal 12 months to get a real picture of what the year might look like. So risks, right? What are risks? Well, let's talk about those, right? So if interest rates rise, we have a risk, right? We feel as though we are done in the rising interest rate environment. We do feel that we will see some reprieve of interest rates. Powell has indicated now is the time. We do think we'll see a rate in September. I don't know if it's 25 or 50 or 75. I don't know what the number is. But needless to say, all of those the first few rate cuts are already baked into the long-term financing that we would be seeking, meaning the rates already factored in there. Short-term rates are not factored in there. Long-term rates are. So rising interest rates is a risk. Lease-up slow. So a slow lease-up will require, if lease-up is slow, it will slow down our refinance schedule. So we're projected right now to do a refinance in 30 months. If it takes us a little bit longer to refinance, that might get pushed out to 36 months. That's a risk. And then obviously lending environments need to stabilize so that there's more potential opportunities to refinance in the markets. We believe this is going to be an agency refinance regardless, and they've been doing deals through rising interest rate environments forever. There is no real risk in terms of finding someone to do 156 units of market rate apartments. Fannie, Freddie, HUD is a great option of execution. There are risks like everything. I feel really great with having the team I have here at F Street, as well as our partnerships with everybody that we've established over 20 years, that the refinance risk remains relatively low. Out of all the things we have to accomplish, the refinance traditionally and generally is one of the easier executions for us, and we've demonstrated that across many different platforms. Sure. So to be mindful of everyone's time, it's 6 o'clock, and I'm grateful for you all being here. We've got a few more questions. I'm going to just keep running through it, but I want to also thank you for your time. The question is, what are some of the costs related to the construction cycle that are not contemplated today or could be contemplated? So the biggest risk for construction for us always is getting out of the ground. So traditionally, we run into risk cycles where we're trying to get out of the ground, and to do so, we're excavating to add something. For example, in West Bend, which we're under construction with right now, when we were getting out of the ground, we started digging and realized there was a massive basement that the geotech, the people that were checking the soils and checking all of the foundations that we were pouring, didn't catch that there was a massive basement that was established that we needed to fill. So we had to backfill that, and that backfill risk cost us $100,000 out of our contingency that wouldn't be there. So getting out of the ground is always the biggest risk. The reality is that we do have ample contingency, and we have a great partner in Greenfire that we feel as though we're going to be well within our budget and not have any surprises on the site. Other risks are environmental. We have none of those on this site. We've already passed all of the phasing to have no concerns related to environmental. And we also have other risks related to third-party vendors, such as the fire code, etc. But in this case, we already have state-approved plans. We already are approved on the coding. So risks get mitigated over the past 6 months to try to diminish that we have no risks at all. The biggest risks we're going to have are going to be in the next 2 months, where we have to get it out of the ground, which is really get foundations poured, and get infrastructure in place, plumbing, sewer, laterals, water, supply lines, electricity. All of that is what really becomes risk factors. Now, what we do to mitigate some of those is we also have issued 3 months ago to Greenfire what they call a limited notice to proceed. The limited notice to proceed allowed us to order the long lead items that are going to be problematic for our transaction, which in this scenario is switchgear for the electric. So we've already ordered those. We've already told Greenfire, go order those on our behalf, and we've signed that document. So that could potentially be a risk. But we, as I said, are continuing and always monitoring to mitigate all risks to make sure that we get an on-time, on-budget project. Yep. So the question is, any update on the retail component of the site? The Village 43 Apartments has no retail component. This investment is strictly and exclusively the 156 apartments. On the corner, assume the site is here. This 1 acre piece of land, 1 acre, my penmanship's terrible, I'm sorry. The 1 acre piece of land is the city, the village, in conjunction with our participation in the $7.45 million TIF, has asked us to provide this to be a retail user. We do not have this secured yet. We are negotiating on various different components of the retail, and I don't have anyone I can share with publicly with who it is. We do have a few irons in the fire, and once those happen, everyone will be made aware of that. Okay, Great question. What is the goal? What is our pro forma? What are we projecting on the refinance to the investors? This is a great question. 50 to 60%. Okay, your investment in 30 months, you should receive 50 to 60% of those funds back to you. Okay, that is a big number. Then we will clear out the rest of the 50 to 40 to 50% or 50 to 40%, however you want to look at it, through all of the cash flow will be going back to the investors till that is brought down to zero, including your preferred return. So both of those pieces happen. So if you invest today, you're planting the money tree. In 30 months, you can expect this tree to be 50% returned to you. The other 50%, let's just say, this is 50% plus pref, plus 8%. This will be returned to you, and then the remaining 50% will be returned to you over the duration of what I would consider to be the next 24 to 30 months. It probably might be a little bit longer, depending on where projections are, but we're gonna get you back 50 to 60% of your investment plus pref within the first 30 months. That's amazing. The answer is yes. So I'm sorry. The question was Greenlink delivered on time during with all of the challenges related to COVID? The answer is yes, 100%. We were on time, and more important, we were on budget. Yep. So we have one question. I think the last question is, when is the cutoff date for investment in this project? The answer is in the immediate future, right? Let's call it the next 7 to 10 days. We are going through the process of raising the remaining capital. There's not much left, but there's time for you to invest. If you would like to commit, please hit the commit button through the F-Street portal. You can commit at fstreet.com. If you're already an investor in the PDF and you'd like to move some funds, you can, let's talk. This is an unbelievable opportunity. There's a lot of great compelling factors for you as to why you should participate. We'd love for this to be either your first or your 10th investment with F-Street. I'm super proud of F-Street BD2 and what we've just accomplished with the reduction, as well as that we're starting construction. This is going to be a great project with great demand, and we're super excited to have you consider an investment. So thank you for being here. Thank you for participating in our webinar. Our closing roundtable for Village 43. I am grateful for your time. I always equally as grateful for your great questions and your thought-provoking discussion. These things are way more fun when we get great questions and great participants. So thank you for being here. I hope you consider an investment. Please visit us at fstreet.com. Join our portal if you're not there. If you're already in your portal, let's see you click our invest button. Now's a great time to be an investor in this transaction, and we look forward to having you as part of our investment family here. So thank you once again. My name is Scott Lurie, founder at F-Street, and I appreciate your time.